are you seeing people now using AI to build and design their own EAs?
This is exactly where we're at, and people are trying to leverage that now. Absolutely, it's what happened.
Welcome to Make Your Move, the podcast that values insights over immediacy. Now, we all know the big impact that AI is having on everyday life. It's changing the way we live, it's changing the way we work, and it's also changing the way we invest and trade. And today I've got a very special guest with me, Ash Glover, who's the Global Head of Retail at Blueberry. Ash, welcome.
Thanks, Pete. Good to be here.
Now, before we dig in and talk about, AI and automated trading and all the fun stuff, I think this is probably going to be one of the funnest episodes because we're getting into not just talking about market ideology, but actual implementation. And particularly for our guests, they've given us the feedback that they want more practical insights into tools and how to implement. Mm-hmm. Tell us a little bit about your background, where you've been, how you arrived here, and when you started experimenting with automated trading.
Sure. So my background started in banking many, many years ago. Like most Australians in the financial services industry, started out at CBA. So I was working there in the private bank. I spent a good 4 or 5 years over there. Then worked into, I guess, more of the higher end investment and trading side of the business with CommSec. So it sort of piqued my interest into the whole investment side of things, but more traditional stocks like we have in Australia, like we've been accustomed to as we've grown up. Decided to move to London during GFC. And that's when I really sort of got involved in the trading side of things. Had some mates who were working for banks over there as desk traders for credit and Forex products. And they tried to get me into industry as well. So I really sort of got thoroughly involved in Forex trading. And that's when I started dabbling into Forex myself, trading my own personal accounts, and then looking at ways to try and make money, whether it be passively or also just myself there trading and learning the ropes. So from there, I moved back to Australia. That's when I realized I wanted to be in the trading industry. And I've been in trading ever since. Still, do my own stuff, try and develop algos, do my own personal trading. So, try and cover all assets and aspects of trading there.
Quick pause before we dive into this episode, which is brought to you by Blueberry, the online trading platform built for pro traders. Whether you're diving into gold, riding momentum in indices, or fading the Dixie, precision is everything. That's why Blueberry's razor-sharp spreads and millisecond execution speeds means you're positioned when you're ready to execute. Trade CFDs in Forex, commodities, indices, and crypto, all from one intuitive platform backed by real humans. And with Blueberry's tight pricing, trading tools, and dedicated 24/7 support team, you're never alone. So when you're ready to make your move, make it with the broker that moves with you. Learn more at blueberrymarkets.com. That's blueberrymarkets.com.
This podcast contains the ideas and opinions of its author and is distributed on the understanding that Make Your Move is not rendering investment, financial, legal, accountant, or tax advice. The ideas outlined may not be suited to your financial circumstances, and therefore you should get financial advice from a competent professional. The author specifically disclaims any responsibility for any liability, loss or risk, personal or otherwise, which is incurred as a consequence of the use and application of the information outlined below.
Ash, it used to be London, New York, Sydney, Singapore. These were the financial centers where a lot of the innovation, a lot of the market-leading strategies, the financial centers used to set the tone, but you've got a global role.
Yep.
And what I want to dig into today is how trading's changing from a global perspective. A lot of times the innovation is being done outside of these centers and is now starting to seep through. Is that right?
That's correct. Absolutely. With the rising popularity of retail trading platforms, we've seen, everyday mums and dads, be able to trade financial markets themselves. And then we have, social media. The rise of social media has also helped in terms of, popularizing trading strategies. You see these trading gurus, all these different people that come up and show you, how easy it is to trade markets. And I guess with the rising popularity of trading and also with the rise in technology and how that works and how quickly it develops, we've seen these centers rise. So as you said, far outside of your Londons, New Yorks. Now we see from a global perspective, Southeast Asia, countries like Indonesia, Thailand, India, even Latin America. Brazil is huge now when it comes to retail trading and even algorithmic trading. So it's moved very, very quickly outside those mainstream traditional financial centers.
I think Japan also has been a really interesting innovator. There's this culture of using technology, and you've also got the demographics that are changing. The millennials are now becoming the predominant player in financial services, and behind them, you've got generations that have grown up with the internet, growing up with smartphones. And so this is only going to be a trend that continues. A lot of our viewers are really, really savvy. They're probably running their own AI bots, AI scripts. But break for us how you saw it starting in the early days. Did it start off with, for example, simple scripts being written by programmers? And how has it evolved into more applicable platforms or technologies that are available to the everyday trader?
Yeah, absolutely. So it did start really with those basic programs. With retail trading being heavily dominated by MetaTrader 4, MetaTrader 5. Back in those days, it really was just MT4 itself. And that was the first way, I guess, for retail traders to get involved with algorithmic trading. And it was very, very simple scripts. A lot of the time, you would just go on to like the MetaTrader marketplace and you'd look for, I guess, an algorithm that seemed to be what you wanted, whether it was a long-term strategy, a scalping strategy, whatever fit your way of trading. And you try and buy an algo from there. Whereas now it's developed into the fact that you can actually code it yourself. But I guess as it progressed over time, it was purchasing those products, but then also hiring people to trade and build those products for you as well. You've got UpClick and all these different places where you can go to hire coders to do that for you.
I think in hindsight, MetaTrader, MT4, MT5, their legacy, they're old school, but their role was very important to the trading industry because they were open source. They allowed a lot of brokers to come to market to basically scale and not have to overinvest in technology. So it lowered the barriers to entry of a lot of the liquidity providers and brokers. But it allowed traders to also experiment. No longer was I just being given a very basic interface that's online trading, but I was now being given a tool that I could customize, play around with, write a script, right?
Yep.
And then as you're saying, that experimentation matured into what? What does it look like today?
Now it's just immense. It's everywhere you go, you see algorithmic trading. I go to my YouTube channel, I'm served up algorithmic trading day in, day out, all these different ads. And with the rise of AI, machine learning, all these different ways that people are, I guess, streamlining the ways they work, coding has become so simple. And I guess AI has helped with that. You no longer need to be a coder or a programmer yourself. You can rely on these tools to help you. And the open source coding that we spoke about, that's really, I guess, helped leapfrog the development in where we are now. You can download a script from TradingView or from some other MetaTrader platform. And as long as you've got some idea, you can start to code, develop, and tweak that yourself. And that's where just this rise in popularity has come from. And I don't see it ending anytime soon.
How is automated trading different to AI trading? Because I think we need to distinguish. We've evolved into an arena where you can set rules, set boundaries, but then you can also add intelligence, which is the AI layer, right?
That's correct.
How do you distinguish between what's automated and what's AI? Are you seeing things in the market today that are more AI, more self-sufficient, intelligence trading on its own?
Those sort of, I guess, true AI aspects are still quite rare in the marketplace. And I guess that's where the confusion comes from between AI and, as you said, just actual algorithms performing, what you're actually programming into with set parameters. Machine learning, I guess, that's where a differentiation is between what's true AI and what's actual artificial intelligence, because you need machine learning to actually train that AI to then take those next steps for you and think, I guess, independently. So true AI machine learning trading is still very, very new for the retail trader, at least. Big banks and quant funds have been doing it for a long time. But retail traders are only just, sort of scraping the surface when it comes to that now.
Okay, so Ash, I want to now dig into more detail We all know that markets have changed over the past few years. Really, post-pandemic, we're seeing different trends in markets. We're seeing volatility and liquidity being addressed differently. But let's say in a volatile market that we have at the moment, how is AI and automated trading being used by traders in the market? So how are they practically implementing? Are they allocating everything to an automated strategy, or are they building portfolios? Are they using it for risk protection? Give us a bit of a breakdown from what you see.
Sure. Yeah, generally you see it's a all-in approach. Someone has a favorite instrument they like to trade and they want to go all in on that instrument. And as you said, it's typically one of those most volatile instruments. Gold has been one of these ones that we've seen over the last, 12 to 18 months, where it's had a huge rise in popularity and everyone's wanted to be involved. It's been a one-way trend for a lot of the time. So everyone wanted to be involved in gold. Highly volatile, very tight spreads, and the ability to move markets. It's a global product. It's not niche to any specific region or country. It's a global product. So that's why everyone's sort of gone full on into gold. And we've seen AI really come and help people trade that. I guess the main use is around execution. When things move quickly, people want to be able to trade that quickly. And on highly volatile instruments, you need to have that speed of execution to, get you that best price. Because at the end of the day, if you think about it, if you're a retail trader, who are you trading against? And in terms of the algorithmic space, it's all against the big banks, the big hedge funds. They've got the edge. So algorithmic trading has allowed the retail trader, to get an edge as well and help bridge that gap between, a quant fund and actual retail trader.
With the retail traders, what percentage or what proportion, it can be just general, of them are now starting to use some type of automation?
It's at least 50%.
Wow.
At least 50%.
Wow, that's a lot more than what I expected.
It is. And it depends on the platform that you use. As we said, MetaTrader 4 was, the leader in algorithmic trading. But now you've got MetaTrader 4, MetaTrader 5, TradingView, CTrader, all platforms that allow you to have algorithmic trading. They use slightly different codes, but again, with the rise in AI and AI technology, you can easily bridge the gap between those codes as well. So it's really allowed the retail trader to have huge market access and very, very quick execution in global markets.
So Ash, are these retail traders, the 50% that are adopting, and I'm sure it will rise, are they bringing their own strategy and implementing, or are they now picking and choosing from a selection of different strategies that are available for them to copy in effect?
Yeah, picking and choosing. And it's very, very vast in terms of what people are doing. A lot of people are still just buying off-the-shelf indicators from MetaTrader. A lot of people actually seeking out via the internet and via referrals anyone that actually has high-quality performing EAs. And then people are also building EAs from their own strategies as well. So it's very varied, but I'm quite surprised to see how varied it is. It's great to see for retail traders to have that much knowledge and that much ability to get into markets.
And outside of gold, obviously gold's the most liquid. It's kind of a big indicator. It dominates a lot of trading books. Outside of gold, what other instruments are you seeing automation work well from a returns perspective? Because everyone's chasing returns, right?
Yep.
Everybody's doing this to make money. Where do the results tend to follow through?
Yeah. So the most common instruments that we see, you got your golds, your silvers, oil at the moment, very much because of, again, the hyper volatility we're seeing with the Middle Eastern crisis, but also foreign exchange pairs and also indexes as well. But bearing in mind for retail traders, it's normally your major indexes and your major foreign exchange pairs. And that's, again, because of, the spread, so the cost involved to get into those trades, and also the money that moves those trends and moves behind those instruments as well.
From your perspective, are those adopting automation doing better than the old school traders that aren't?
It's a bit of a mixed bag, actually. Some of them are very, very profitable, and especially the EAs that capture trends. Trend following EAs are very, very profitable because they identify the trend and they move with that trend. So potentially, buying the dip on the way up or selling it on the way down. Whereas, if you're not using AI technology or you're not using algorithms, you have that human emotion that comes into it. And that tends to, dilute the profits that you're making from your trading. But then from the flip side, with the EAs, that, as they say, the trend's your friend till the bend in the end. And it's when that trend ends that you see sometimes these algorithms can, not perform so well.
I think, Ash, something also important to a lot of traders out there, one of the things I look at is maximum drawdowns. You can bring me the best strategy in the world and show me the best returns historically. But show me your drawdown exposure. Show me how bad it's been for you, how much risk you've taken to get to where you've come. Because sometimes I would rather take a strategy that's underperformed but with a lot less drawdown risk, right? So what are the indicators that you look at or that are important to you when you're looking at a strategy to implement or not? Other than returns and drawdowns, what are some of the key features that traders need to look at?
So they're very, very important things to look at, absolutely. And drawdown is imperative when it comes to choosing any strategy, whether it be, a man-made strategy or an algorithmic strategy. But the other ones, I guess, are the risk management inputs that you can have with these EAs. And that is number one, determining how much risk you want to take. Number two, determining, I guess, the indicators, the underlying indicators that the algorithm uses. The more that you have some selection where you can try and, I guess, optimize that EA, the better it will be for you. So, some of the poor performing EAs are quite simple, very, very simple strategies that can come unstuck quite quickly. But the people that can have EAs with multiple inputs that you can actually physically optimize will go a long way to helping you, I guess, ride out the ups and downs in the market. And as we said, avoid those big drawdowns and hopefully show good profitability.
Maybe for some that are watching this that hear the term drawdown and they think they understand it but may not, drawdown from your perspective is basically how much you're willing to let a position go negative on average. Is that right? How would you define it?
That's correct, yeah. So say, for instance, you start with $1,000 in your trading account and you might have a really aggressive trading strategy, whether that be, clicking yourself or an algorithm. So if you let those losses, those unrealized losses, come down, down, down. So say you got a $1,000 account, it goes down to $750 before reversing. That's a $250 drawdown on that account. So as a percentage term, that is quite large. Ideally, you want to keep those drawdowns very small, but maybe between 1% to 2% per trade. And the drawdown can exceed that depending on how many trades you open at once. But ideally, keep the drawdown small. You don't want your equity to dip far below your actual account balance. And that's the most important thing, keeping that tight.
Now, Ash, what about bad actors? What about things that kind of are not true? Do we need to look at the people behind the strategies? Is that a factor? Or is it purely the numbers? Can the numbers be manipulated? Can they be back-tested on incorrect data? Give us a bit of a perspective as to what you should look out for.
Yeah, I guess the most important thing to look out for when it comes to choosing an EA, especially if you're buying an off-the-shelf EA, is the equity curve. So the MetaTrader platform will make you show all the parameters that you've used for that EA, and it will show you the equity curve. And that's what a lot of people look for. You want to see a nice, I guess, really diagonal, if you can, curve going from left to right in an upward direction. It's all right to see peaks and troughs along the way, but it's still going in the right direction. But what you'll see is these beautiful, smooth curves, and that generally tends to suggest that EA has been over-optimized. And that's the thing, because you can backtest in MetaTrader, you can tweak all the different parameters from backtesting old data to show this is how it performed in the past. But as I say in investing, past performance is definitely no correlation to future performance. So to be very careful of over-optimized EAs.
So there could be some EAs out there that are intentionally designed to look good when they're back-tested, but they may have not necessarily executed during that period of time. Is that correct?
Correct, absolutely. So when you're backtesting, you're using a set piece of data that's been there in the past. But as we know, markets are dynamic. They change constantly. They go from trending markets to ranging markets to spiky volatile markets. The EA has only been, I guess, optimized for one type of market in the past. So, chances are it can't adopt to new markets unless it's tweaked.
What other red flags should people look out for when they're looking at implementing EAs? We've talked about MetaTrader, but maybe on some of the other platforms that you mentioned that are also popular from a copy trading perspective. There's a lot of choice out there. What are a few other things that people should be aware of?
I guess there's a lot of over-marketing of things as well. If a lot of hype, as they say, sort of be aware of the hype. That's probably one of the most important things to be wary of, because it could be someone that's coming in, saying they've got a U-Butte strategy that's, returning exorbitant, I guess, returns in terms of percentages. But it's more about the hype. And I guess a lot of people who are trying to sell EAs as well, they might not trade themselves. As we said, it could be an over-optimized EA, but they're making their money from the sale of that EA, not necessarily making the money from trading themselves. And that's what people quite often say. If your EA is so profitable, why are you selling it? Surely it's going to dilute the market. It's going to make spreads wider. It's going to really impact the underlying market. So if it's so profitable, why wouldn't you just keep it to yourself and make millions of dollars yourself?
Final question before we go into the next segment. But Ash, are you seeing people now using AI to build and design their own EAs to make them work for themselves? Or is that bridge still a little bit too big where they're still going off the shelf?
No, that's a great question. It's right where we're at now in algorithmic trading. That's this is exactly where we're at, and people are trying to leverage that now. Absolutely, it's what's happening.
Now, Ash, that's a great segue into the next section where I want to dig in a little bit deeper and talk about implementation. You touched on people using AI to develop their own trading tools. Let's talk about it practically now, right? So is this something where I jump into my ChatGPT or Claude, give it a prompt, download a script, upload to MetaTrader? What are you seeing? So how are they starting to implement that from your perspective?
Yeah. So generally, someone's got a strategy they're trading themselves on a discretionary basis. And they might think they've got an edge with that particular strategy, and that's why they've been trading it. But humans need to sleep. You cannot be awake 24 hours a day, 5 or even 7 days a week now with cryptocurrencies. Markets are 24/7 beasts. So you need to make sure that you're either sleeping during the time or you're trading during that time. You can't be awake all that time. So people are generally finding a strategy they've got with an edge and then trying to code that. And again, it is using ChatGPT, Claude, or Gemini, some of these bigger AI tools to then code that strategy for them. But again, like everything, we hear this a lot about with AI, it's very prompt-based. Unless you have the right prompts to prompt the AI to build that for you, then you're never going to get the actual, strategy that in your brain. And that's the thing that's very difficult to bridge that gap between human discretionary trading and algorithmic trading. There's a lot of prompting, a lot of back testing. It can take a long time, to code out a man-made strategy into an AI algorithmic strategy. And that's where we're seeing trading going now. And maybe the difficulty some people are having in trying to implement AI into their trading.
So people are usually starting by taking a preconceived idea around an instrument that they know well.
Yep.
Someone has been dabbling in markets, watching markets. They may think that the market opens up in the US. The S&P opens up, for example, and spikes, or the NASDAQ or whatever, something like that, time zone based. They then take that to AI. They put in the prompts. They develop a script. They go and upload it.
Yep.
And they start that experimentation. Is that kind of the layer that you think we're at now?
That's it, exactly. And it's a two-pronged multi-layer approach as well. You can get that script, you can load it into a meta manager, and you can backtest that script. But again, that's just using old data. And old data is certainly not reflective of what we could see in the future. So you're backtesting, but you're also forward testing as well. And that's, unleashing that EA into a live market on very, very small notional values to see how it actually performs. And that's the thing, is the performance of the EA how you actually perform yourself in discretionary trading? And that's where we find these big nuances, in different markets and the way that the AI or the algorithm executes trades in a live market compared to how a human does it. A retail trader's got battles. You've got slippage. You've got swaps. You've got, the broker infrastructure as well, which slows down trades compared to a bank that just goes straight to an exchange via microwave. So there's a lot of these nuances that retail traders need to overcome to make those EAs profitable for them. And that's why constant tweaking, constant prompting, and constant testing is the only way that retail traders can try and, turn that discretionary strategy into an algorithmic strategy that works.
Are we at the point yet where you can just get your AI to trade itself, to build the investment strategy, the tools, implement, manage its P&L, audit, come back and report to you as a hedge fund?
With the right prompting, you can do that. Absolutely. You can have the EA create a journal of every single trade that's been done, and that stores that in a file on your computer. You can have that EA recall those journal notes and learn from those. Again, that's that whole machine learning thing that we spoke about earlier. You can have Python feeds that come into it. There's so many different things you can do because AI is, I guess, so now adept at, just calculating, computing, crunching numbers, writing code, and helping, I guess, the lay trader do stuff that's normally been the realm of quant traders and big banks. So you certainly can do that. But I think the time involved to master that is, if you're holding on a full-time job, a family, you're not going to have that time. It's going to take you years and years to build that out. So yeah, that's why, it's all up here when it's discretionary trading. To try and build that out and have it actually coded into an EA will take many, many years, I think, to actually perfect, especially as well with the different market nuances. You see during volatile markets and news announcements, spreads widen. If that's not taken into account, that could easily blow out all the trades on the account. The rollover of the market where volatility, ceases, trading ceases over a certain period of time, again, spreads blow out. If that's not taken into account, again, that can blow the trades up. So again, these are stuff that you know in your mind when you're a discretionary trader, but actually putting that into code and prompting, I guess, your machine learning technology or AI to build that into your algorithm is very, very important. And that's where live testing is the only way you're going to find out, does this work? Does it not work? What do I need to tweak? What do I need to change?
I think what this AI wave is also showing us is that we as humans do have our own software and hardware. We have our own code, and we're now just comparing our code and our ability to plug things together versus a machine. And the machine is at the early stage. As you say, the plumbing's kind of there, but it needs a little bit more work. We've been evolving for a very long time. And these silicon chips and these, this AI infrastructure has been evolving for maybe a decade or so. But to look forward, as someone who's been in the industry for a very long time, you've seen a lot of evolution from the days where CFDs and derivatives came to market, and that was one of the biggest fintech innovations, to an era where anyone can prompt their AI to build a script that can then automatically trade. I mean, that's pretty crazy, right? To how far we've gone in such a short period of time. But for you, where do we go from here?
You know what? I think we go further down the rabbit hole in terms of AI machine learning. It's only new. It's a talk of the town. I look at the stock market. You see NVIDIA, tech stocks. It's all about AI. It's all about these capital raisings. We need more money. There's more AI. So I think that's never going to go away. I think if anything, it's going to escalate in terms of the usage and the development. I guess of speed of development as well. I guess that's one thing to cover is, when it comes to building these EAs, I remember maybe only 12 to 18 months ago when I was playing around with some of my own stuff and punching it in, building the code, and I put it into the MetaTrader compiler, and it would come back with so many lines of errors. And to try and go through line by line and have the AI fix that and tell it, here's where it's wrong, please fix this. Whereas in the last 18 months, now you see Claude, Gemini Pro, ChatGPT as well. Their coding ability has increased dramatically. I can put stuff in now where it comes back absolutely seamless, no errors, and you could launch it straight away. So, it's going to only get more and more refined, more and more powerful, I think faster in terms of the way it thinks and builds. But like all things where it is machine, learning, that might be one of the key things to look at there are errors. It can make errors. An example was one I had the other day. I was trying to code something up and it made 2 errors in the space of 3 different lines of code. And if the AI was super apologetic, saying, I shouldn't be doing this, but guess what? I am. And I do apologize for this. So, AI, I don't think in the future is ever going to take away from that human discretionary element. For a retail trader, again, as I said, with the different nuances in the retail market, I don't think AI, at least in the next decade or so, is going to bridge that gap super quickly. So I think, discretionary trading will still be there. There's always going to be a need for discretionary trading. But I think if you can use EAs to help you with that discretionary trading is maybe where we will probably really escalate in the next maybe 5 to 10 years. You can use it for risk management. As I said, you can use it for times when you might be asleep or away from your computer. You can use it for drawdown management. I guess all these things to add maybe a belt and braces approach to your discretionary portfolio. That's where I see it as being a real tool. It's actually helping you with your own decisions. As we know, human nature, psychology, trading is 80% psychology, 20% the actual trading. And if you can take the human element out of it, fear, greed, all those sorts of things we do every single day in financial markets, I think that's where you can really help a retail trader with a discretionary strategy make big gains in markets. You might not move stop losses, might not move take profits. You might not enter in revenge trades. You might have, I guess, a more seamless entry, seamless risk management to hopefully, as we said, smooth out the drawdowns and take that human element, that negative human element out of trading and really enhance your trading experience.
I think equally is that as humans, those emotions that we do have can sometimes be really useful. A machine can't sniff out a major catastrophe or a market capitulation. And sometimes it's important to make sure that you can use those emotions to your advantage, while at other times they can be a big hindrance to you, right? So it's, you spoke about the balance between human and machine, and we're going more in the machine, but the human's also valuable because our biology has been developing and adapting to risk. There's reasons why we get scared. It's because we're programmed for survival, right? And so it's also important to be aware of those human emotions, and it comes together as a nice package.
It does, absolutely right. And that's why, discretionary trading will never die. And, that's why we said a lot of these EA-based strategies are derivatives of discretionary trading. A small population are quantitative analysts or mathematicians or statisticians, and they're the ones that are working for the investment banks.
Sure.
But that's different style of algorithmic trading they're using. That's more speed.
Sure.
That's trying to take advantage of, I guess, inefficiencies in the market. Whereas retail traders, we're not like that. We have a strategy and we want to build on those strategies and use those strategies to make money. We're normally more swing traders, maybe shorter term scalpers, but we're not there, and we can never be high frequency traders and compete with the banks, the hedge funds, because that's just a different beast altogether. And sometimes we see that overlap where you see retail traders thinking, banks use HFT, I can do that too. But again, even with the best VPS, the best co-location to your broker's servers, you still don't have that firepower to be able to compete with investment banks and hedge funds. So again, it comes back to that human element of trading. There's strategies that we use as humans, and we, I guess, derive them from our discretionary trading, and we'll try and build on those. And that's where I think, I guess, AI and algorithmic trading will go in the future. Is you're comfortable with a strategy, you build it yourself, use it to enhance that strategy. I don't think it's ever going to replace the human trader.
Yeah, that's a fascinating misconception. I was going to ask you, but you just spoke about it, the misconception that all AI, all algorithmic trading, all high frequency trading is the same. And it's like, just a minute. Just because you've scripted up something on ChatGPT, don't think you're Jane Street, or don't think that you're running the same infrastructure or the same compute. It's great because you're kind of moving in that direction, but you need to always be aware that there's bigger players in the market and they're playing in different lanes and different games. Ash, final advice for someone that is on the fence, unsure, they want to experiment. What's the least costly way to experiment and tip over from having never done it into implementing something where they can learn and maybe build some confidence?
Yeah, great question. And I think this goes back to what we were discussing earlier, is that open source coding. TradingView, the TradingView platform is very, very popular. Pretty much, I think 80% of traders have a TradingView account or use TradingView for their charting and their decisions in terms of what they want to trade in financial markets. And TradingView is a very driven community as well, and a lot of the code there is open source. So I would suggest, if you're a trader looking to get into algorithmic trading, is explore TradingView. Find out what indicators or some strategies that work really well, and then download that source code. And then you can drop that, literally copy and paste into ChatGPT, Claude, Gemini, one of those tools, and ask it to convert it into, say, MetaTrader 4, MetaTrader 5, or CTrader. And it'll automatically code that for you. And then you can backtest and play around with it. You can use a free AI. So you don't have to be paying, subscriptions to have the pro versions of algorithmic, like ChatGPT or Claude. You can do it for free of charge. Do it on a micro lot strategy. So again, once that strategy is built and coded, trade it in the live market, but on the smallest notional value you can. So as a retail trader, your cost base is extremely small. But if you want to dip your toe into it, that's the best way of doing it. You want to keep your costs small and hopefully your gains big. And then as you become familiar with it and you grow, then I guess you can change it and upgrade to higher quality, coding and things like that with paid subscriptions. But initially, keep it low cost, keep it simple, and just dip the toe in.
That's awesome advice. Well, I guess with AI now, even my grandma can use AI. There's no more excuses. You can it all comes down to your willingness to learn, how much time you want to invest. You've just laid out a framework there for someone to go out and implement. They can take the transcript of this chat, go and put it into AI and get it to implement what you just spoke about. So there's some great opportunity there, and no doubt that the tools that you guys are developing and the platforms and the technology is only going to get better and better. Before I leave you, thank you so much for being gracious with your time today. We've actually got a listener question.
Okay.
It's great because we're getting a lot of listeners sending questions through, and that's what this podcast is all about. It's about giving you the insights and a seat at the table to ask our guests all these amazing questions. So Adam, thank you very much for your question. Adam asks, what was the biggest obstacle you personally had to clear when moving, get this, from manual trading strategies to accepting automated inputs? And what were the quickest ways to upskill your knowledge? You've kind of given us, let's wind back a very long time to when you were doing it. And, AI didn't exist.
Yep.
How did you make that switch from one side of the ledger to the other?
So I guess for me, it was different trading sessions. As I alluded to earlier, you can't be awake 24 hours a day, 7 days a week. And being based in Australia, unfortunately, the way it goes is that the markets are least volatile during the Asian trading session. Market volatility and opportunity only really ramps up when you get to the European and US sessions. So being based in Australia, I thought, I'm missing out on the best moves here, but I can't stay awake all night long, function with a family, function with a job, and be my best self. So something had to give. So the way I did that was to dabble with algorithmic trading. So I wanted something that could execute for me while I was asleep. So I didn't miss those big moves in markets. But again, it's that trust piece that you mentioned in the viewer question, is that when I'm sleeping, especially my first foray into it, how did I trust this was going to work for me when I'm not attentive to it? I can't see. I don't know what's happening. Am I going to wake up in the morning and find out that the money there that was there yesterday is now gone today? So again, that's when it came down to, as I said, using those tiny, tiny micro lots, just small, small notional values, and just giving it time to breathe, giving it time to work. Give it at least 2-3 months to make sure that the EA has seen a few of the different market dynamics that you might see, volatile spikes, gaps in trading, range-bound markets. And then only when you're confident and you've seen it, I guess, in a real live forward test, then start to slowly ramp it up. But again, don't ramp up too quickly because, as we said, market dynamics change constantly and they change quickly. So you want to make sure that your EA has seen, almost all there is to see. Because chances are in 2 to 3 months, you're not going to see all of that. So that's what I would say, start small and just you got to build that trust over time. And that was, I guess, the biggest hurdle for me is making sure that I had that trust and the ability to take that step and that leap into the unknown, which it was at that stage. It was a complete unknown. It was only new to retail traders. Banks had even only just started getting into it as well. Co-location in servers, black box technology, all that sort of stuff. So again, if it's new to a bank, for a retail trader that I guess doesn't have the edge that a bank has, it's just building that trust, developing that trust, and just going with it.
Always at the forefront. Ash, thanks so much for joining us. It's been great to get your wisdom, your insights. This is a topic that isn't going away, so we're going to get you back. Maybe we're digging into more strategies, and who knows where the world will go between now and then with the way that AI is changing. And to you that's watching or listening to this podcast, thanks so much for joining us for another episode. We've spoken today about AI and automated trading. If you have a strategy that you've been using, put it in the comments, share it with us. We're building a community here. If you have questions for our guests in the future, make sure you write to us and let us know what you think. And perhaps most importantly, If you found this episode useful to you, please share it with someone that you think can also benefit. Until next time, this is Make Your Move, the podcast that values insight over immediacy.
This podcast has been powered by Blueberry, a licensed CFD broker. For listeners based in Australia, Blueberry holds AFSL 535,887. You should read the PDS, Client Agreement and FSG. For clients based elsewhere, Blueberry holds a full-service dealer license with the Mauritius FSC.